I'm BJ with Property Management, and we manage small HOAs in the District of Columbia. In this video, we're going to talk about the biggest budget killer for all small HOAs, and that is insurance and policies and claims and everything we find on rates and stuff. So I'm going to give you 5 steps to protect the HOA from insurance rate hikes. So number 1 is mandate an HO6 policy. Number 2 is require every homeowner to contact the board before they make any claim on any policy. Number 3 is make that homeowner responsible for any deductible if they are found negligent or if it was caused by their unit. Number 4 is raise your deductible from $1,000 to $5,000 to even $10,000. And number 5 is preventative maintenance. So let's go back through each of those. So number 1, HO6 policy. So a typical homeowners association, homeowner insurance policy is an HO3, and that covers the building, the walls, the roof, foundation, and then everything inside. A typical condo should have HO6, which means that they're going to be responsible for master policies there for the building, the structure, that kind of stuff. But the HO6 adds more personal items for that condo owner, right? Another thing you can do is you can add loss assessment coverage inside of that policy. So the policy pays for their share of any building-wide special assessments that's caused by an insurance claim. So if we look at the HO6, require all homeowners to carry the HO6. This ensures the interior of the unit, cabinets, the floors, and the personal property is covered by a personal policy rather than the master policy. That's a big thing to look at. All right, so number 2, require every homeowner to contact the board before any insurance is filed. What this does is even if a claim is made on the insurance that's not covered, so say there's a leak from unit A to unit B, and it was a kitchen sink, and we fix that plumbing for a couple $100, and we can patch the ceiling for $1,000. If we contact the insurance on that and they say, hey, your deductible is $5,000, we're not covering this, you still can see an insurance rate hike even on a loss run report like that where they're not covering it. It's just they've been notified, they've been put on notice, they're going to raise your rates. So by adding you as a gatekeeper, it stops the insurance from being notified, and then we determine whether we can handle that in-house self-insured, or if it's a large claim that's maybe flooded 3, 4, 5, 6 units and we need to actually contact insurance. So the next one is require the homeowner to be responsible for that deductible. And so that's a homeowner sink that's leaking and dripping into unit B. Well, that has nothing to do with the HOA. And so if that homeowner contacts the insurance policy and increases the rates and the insurance covers it, that homeowner should be responsible for any cost that the insurance had to cover. And that's going to be deductible, that kind of stuff. So, and then the next thing is basically the self-insurance is increase the deductible from $1,000 to $5,000 to even $10,000. And that way, even if there's large damage and it was neglect of a homeowner or a homeowner's hot water heater that has nothing to do with the rest of the building that caused the damage, then that homeowner is the one that's going to be paying that deductible. And so if it's $8,000 damage, homeowner covers it, it now does not go to the master policy. Now the trick here is if they contact their insurance, who's then going to trigger the master, that's when you want to go back to the gatekeeper part where because they contacted their insurance, they should be responsible for that rate hike. And again, that's when we got to check with an attorney on to verify that's doable. Number 5 is just the preventative maintenance. So for a couple $100, you could have somebody go through and check all these sources, whether it's the HVAC units, the hot water heaters, washer dryers, any areas that get wet, make sure we're looking at the roof, that kind of stuff. But get people in the building looking at it to see if we're on top of it, or sending reminders to homeowners to check your sinks and do this and look behind your toilets. There's water monitors that people can add that we've talked about in other videos that will beep when a sink is getting water underneath it. And so that could be something that HOA could make recommendations on to homeowners, or even do property inspections and check those things. So those are the 5 things. BJ with Property Management. We manage small HOAs in the district. We also manage single families and condos. If you have any questions,